Hello everyone. I am just starting a new recording here. Hopefully going to be doing a couple series here in the next couple of weeks, maybe do some live trades among some other topics. And just wanted to make a quick video. Those of you who have kind of followed me into the adventure of stock trading. I started trading just part-time. I still have a full-time job, but I started trading here about this time last summer. I was introduced to the idea of day trading and I guess just kind of some strategies to produce bigger returns in the market than what you'd typically get in a 401k or IRA or something along those lines. So paper traded for a few months, started with real money towards the end of this past year, and so far in about 7 months this year, I started out with about $4,500 in real money, and I've grown that up to over 25,000 just as of last week. So those of you that have kept in touch with me and along the way through the journey have kind of seen some of this success, and so I wanted to make a couple videos on kind of what I look for in the market and I guess just some patterns to help you trade if you're interested in learning more about stock trading. So I guess just to get started, just to show you a couple of quick wins and how quick this can happen. Go over here and pull up my Twitter account. So if you're interested in kind of seeing some of these positions that I take at different points in time and just seeing how those play out, you can follow me at BINGELDA on Twitter. But here's one. This is one of the very first trades I made in October. You can see here this was very, very small position size, $500. Bought in at 79 cents, and this is what we call a swing trade. So I took this on a Friday evening before the weekend and sold first thing Monday morning. As you can see here, I took almost a 10-cent gain. So this is a very, very small position size, but you can imagine, let's just say you had a few thousand shares of this here. Very, very good money for a relatively low risk trade. And as we go along here, you'll see a few more, but this one was in December of 2016. So quick $150 in 8 minutes. Bought in 1,000 shares at 84 cents. Sold out at 98 cents in 8 minutes later. So $150, 8 minutes. Once again, a very small position size, but let's just say you had 5,000 shares. You can imagine, the dollar amounts add up pretty quickly. This was a more recent trade that I had. This is on June 20th, and this took 2 minutes. $1.85 to $2.25. 750 shares. So once again, very small position size, but I'm just showing you that you can have a small account and grow it relatively quickly just by knowing what to look for and how to trade. So just to go over this play real quickly, this is the quick $300 2-minute trade. Once again, if you had a larger position size, you could see the dollar amounts obviously add up. So just going back, I have this on a on a daily chart, just to show you what happened that day. And this is one of the plays that I do quite frequently. I'm really just looking for news and momentum. You can see here on the morning of the 20th, pre-market, news came out that this company had won a contract to build a hybrid chiller plant at Hong Kong International Airport. And what happens when a company releases good news or good earnings report, it usually brings some hype into the stock. You can see here the stock didn't really trade a whole lot the days leading up to this big spike here. You know, maybe 10,000 shares on average throughout these few days. And this day, all of a sudden you have 2.7 million shares. And you can see here on this candle that the stock opened that day at 145 and got to a high of 230. And I just traded it from $1.85 up to 225. So, you know, just taking a very small portion of this candle, but adds up to a nice chunk of change in a few minutes. So these are kind of more like momentum trades, day trades. This is probably something that you're not going to get into right away. But I'll show you a couple of things that I look for when I'm making, I guess, longer term position trades that somebody who is starting out might be able to make those exact same types of trades. So I'll show you one from today. And this is one that I actually had my dad take a position in. So this is RAD or Rite Aid, as you can see here. And what I'll do actually here is I'll remove all these extra lines and whatnot. Okay. So this is what the chart looks like. Once again, this is a daily chart, so every one of these candles equals 1 day. And so this is what happened here with Rite Aid. This big green candle here was on 6/26. I believe there was some news that day that was in reference to Walgreens purchasing Rite Aid. There's been a lot of news on this stock, so I can't even go back that far right here on my live news stream. I'm going to exit out of this too because you don't need to know what that is at this point in time. But this is a pattern that I look for a lot when I'm doing what we call a swing trade, where I want to hold a stock for maybe you know, anywhere from a day to, you know, a few weeks. And what we're seeing here, what happened this day, where you see this big gap down where this stock went from $3.68, or nope, sorry, it closed at $3.93 and it opened the next day at $3.08, so almost $1 a share. This dropped down that day, and what happened was news was released that Rite Aid was no longer going to be bought out by Walgreens. In its entirety, anyways. I believe Walgreens is still purchasing a certain number of stores. But anyways, in the same way that news can bring hype into a stock and drive the price up, bad news can do the same thing in the other direction. So you can see here what happened. There was a big gap down basically within the next 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days. The stock dropped from 308 down to 221. So 11 days total, 11 trading days. The stock went from 393 to 221. And what this typically shows to me is that there was an overreaction in the market. And so one of the things that I look for when making a longer term trade is this exact same scenario where you see a big drop and then you see continued sell-off, and then you start to see what I call this fish hook pattern, where you start to see this fish hook. And so you can see here, this kind of put in a bottom here at 221. Now what we'll do is we'll look at the 3-day chart. So this is 3-day, 3 minutes. So every one of these candles equals 3 minutes. But you can see here, if we were to, I guess, just basically draw in some basic support and resistance lines on the stock, you could see here 221 would probably be the bottom. And you can see over the next few days while it traded, it just sat here basically in a channel between 230 and 221. And then what happened was just the other day it broke through 230. Once you have a resistance line that is broken, usually that line serves as support moving forward in the chart until it's broken again. So came through here, got up to 240, came back down, been sitting along this 230 line. This weekend, when I was at home, I was just looking at different charts, looking at different patterns. I actually have a scanner that I use that kind of gives me a set number of charts to look at. That's where they're starting to form this pattern. But you can see here it kind of bottomed out, a couple smaller red candles, and then down here you actually see the volume of the stock. So you see heavy volume during the days that news were released. Slowly the volume starts to die out, and then you see this green candle come in, and all of a sudden volume starts to pick up again. And so at least that's what we're anticipating. So this should start to curl up. And then actually what happened here, going back to the 3-day, 3-minute chart, people that I told this stock to were buying in right here at this 230 area. After hours today, you can see it spiked up from 230 up to 252 as a high. It came back down, and it looks like after hours it closed at about 245. But still 15 cents a share here on this position. If I had to guess, I would think that this will actually break through this 250 mark during the pre-market activity tomorrow morning, and you could see this continue to curl up here. And so we'll see what happens in the next couple of days with this stock. Another one that I've been looking at recently with this exact same pattern here is Abercrombie and Fitch. ANF is the ticker symbol. So all those middle school t-shirts. But you can see the same thing happened here. The stock was trading in a range of $12 to $14.50. Some bad news came out. The stock plummeted. There's a big gap down there. And then big red candle, big red candle. Okay, now the stock's starting to put in a support, starting to put in a floor here. Looks like 881. Same thing is happening here. You're starting to see this curl up. Now this one's slightly more concerning just because the volume's still kind of dying off. But tomorrow, if there's a lot of buying activity, or it looks like there was actually some news after hours here on improved retail traffic. So I would expect there to be some more buying activity tomorrow and some more volume coming into this play. But as you can see here, typically these stocks, when they make this little fish hook, they don't necessarily do it right away, but typically you'll see when a stock has a gap like this, like even just looking at this chart here, there's a gap here. Typically you'll see the stock correct again over time and fill that gap. So this is a nice chart pattern here. You can see that same thing here. There's a small gap there, corrects itself. So anyways, there's a pretty nice size gap here, obviously. You can see this starting to curl up. Eventually, at some point in time, I would expect to see this gap filled potentially. The one thing that's working against this stock is that $10 is a very, very challenging resistance line. So if I were to take this play tomorrow, I'd probably be looking at the 925 area up to the $10 mark, either tomorrow or within the next few days, and that's probably where I would get out. But once again, 75 cents a share, load up on a few thousand shares, pretty nice chunk of change for a few days. And so this is one pattern that I look for. I call it the fish hook. And what you're looking for here, anytime you enter a trade, you should have a entry point, a price target that you're looking to sell at, and then a stop loss. And so when I'm looking at these patterns here, like let's just go back to Rite Aid, for example. You see those two lines. If you're buying in at the 230 area, probably just below this 221 line is going to be your stop loss. Okay, so just looking at this chart, and I would say probably $3 is definitely very reasonable in the next maybe week or few days even, with the after hours price action, since it's already going to be in the 250 area. But you can see here you're taking 230 up to $3, and then 230 down to 221. So you have basically 70 cents of reward compared to 10 cents worth of risk. And so this is a way that you can really add significant percentage gains to any money that you're trading with in a short period of time, looking for these patterns, looking for the right stocks to play, and making a trading plan. So if you guys find this helpful, hopefully you'll like this video. I'm going to create a YouTube channel, and hopefully if you have any questions or things that you're curious about, I can certainly try to help answer some of those things. But keep an eye out on that channel for the next video that I make, and hopefully this will help you with your future trades. Even if you're just a casual stock trader, you'll be able to get some value out of this.